Bitcoin is the world's best performing asset class over the past 10 years. Next on your 4-Minute Crypto Daily News. Hello and welcome to 4-Minute Crypto. Now today's show is from a post by Maria Hewlett at Cointelegraph.com and is brought to you by Crypto Crybaby. Take a look at the large selection of Bitcoin t-shirts, caps, and all the other crypto merchandise that's available at CryptoCrybaby.com. And before I start, I do want to remind you to please like, subscribe, and share. Now, crypto industry investor Anthony Papliano says Bitcoin will likely fall to around $3,000. Papliano gave his forecast during an interview on CNBC's Squawk Box back on November the 26th. Papliano is a partner at the cryptocurrency investment firm Morgan Creek Digital Assets, and he argued that while Bitcoin was overvalued in December of 2017 and has been selling under pressure this year, driving its price downwards, there are several important factors related to the asset's long-term value that are important, very important to remember. The first one of these is that Bitcoin is the most secure transaction settlement layer in the world. So it's got to be worth something. It's also the best performing asset class over the past 10 years. It has outperformed the S&P, the Dow, and the NASDAQ. Now it has experienced two 85% drops during that time, but it's still up over 400% in the last 2 years. 30 added all of Bitcoin's price action in the past year has been driven by retail investors, people like me and you, ahead of any meaningful involvement from major institutional players, such as those about to enter the cryptocurrency space next year. A couple of those big players about to enter the space include Fidelity and the New York Stock Exchange's operator, the Intercontinental Exchange, also known as ICE. Papliano argued that the recent washout on the cryptocurrency markets is a barometer of retail investor patterns. Throughout its retail-driven history in 2017, the cryptocurrency traded as a highly volatile speculative asset. By contrast, he continued, the more recent institutional involvement is primarily conducted with less transparency and over-the-counter trades where trends are not immediately apparent and harder to gain insight into. Papliano was asked about dwindling profit margins for cryptocurrency miners as cryptocurrency values tumble. He claimed that miners with abundant low costs of power, such as the ones in China, can mine Bitcoin for as little as $2,000 to $2,500. And we're seeing a similar washout of miners in the area where electrical costs push expenses closer to $6,000 or $6,500. Now, Morgan Creek Digital Assets is banked by the institutional investment house Morgan Creek Capital, which has $1.5 billion in assets under management. They launched the Digital Asset Index Fund in late August, which gives accredited investors indirect exposure to Bitcoin, Ethereum, and 8 other large market cap assets, but not any pre-mined cryptos like Ripple, which you may know as XRP, and Stellar, XLM. Now I have to say, this has been one heck of a bear market for Bitcoin and cryptocurrency. Let me know your thoughts on Twitter, where I'm at Gary Leland, and don't forget to join me every weekday for a new episode of 4-Minute Crypto. This is a CryptoCousins.com production.